know that in the 2008 financial crash, nearly 2.4 million millionaires vanished overnight? What if I told you that some of the wealthiest investors lost everything, not just because of bad luck, but due to a series of fatal mistakes? Some had it all: luxury cars, private jets, and global influence, only to watch it disappear in an instant. Today, we uncover the truth behind these financial disasters, so you don't make the same errors. Stay tuned as we break down the biggest financial collapses in history. Fortunes can be made and lost in an instant. Some of the richest people in the world have watched their wealth disappear in market crashes, often due to decisions they thought were brilliant at the time. From actors to athletes to business moguls, no one is safe. The same patterns keep repeating: overconfidence, reckless investing, and ignoring warning signs. What went wrong? And more importantly, what can we learn from their downfall? Let's dive in. The stock market has always been a double-edged sword. While it creates immense wealth, it also has the power to destroy fortunes overnight. Even seasoned investors, who have spent decades building their wealth, have fallen victim to its unpredictability. Market bubbles form when confidence is at its peak, but when reality sets in, fortunes can evaporate. But why do even the most financially savvy individuals lose everything? To answer that, let's look at some real-life cautionary tales. Please, before we continue, like and share this video and do not forget to subscribe in order to support the channel. Story 1. Ike Batista. From billionaire to bankrupt, once Brazil's richest man, Batista was worth over $30 billion. He heavily invested in oil exploration, believing his empire was unstoppable. Over-leveraging and failure to deliver on oil production promises led to a dramatic collapse. His assets were seized, and his empire crumbled. Lesson: avoid excessive risk and don't overestimate market conditions. Story 2. Jesse Livermore. The greatest trader who lost it all. Livermore made a fortune betting against the market during the 1929 crash. Despite his genius, he lacked risk management and suffered massive losses later in life. His emotional struggles with wealth loss eventually led to his tragic downfall. Lesson: trading success isn't just about making money, it's about keeping it. Story 3. The dot-com boom and bust. Investors who bet too big. In the late 1990s, tech stocks soared as investors rushed to cash in. Many startups with no real business model attracted billions in investment. When the bubble burst, companies collapsed overnight, taking investors with them. Lesson: never invest purely on hype, fundamentals matter. Story 4. Björgólfur Guðmundsson. The Icelandic tycoon. His banking empire expanded rapidly in the 2000s, fueling Iceland's economic boom. When the 2008 crisis hit, Iceland's banks collapsed, wiping out his fortune. He went from billionaire to bankruptcy in a matter of months. Lesson: economic cycles are real, prepare for downturns. More stories covering different market crashes and individual failures. Please, before we continue, like and share this video and do not forget to subscribe in order to support the channel. Nicolas Cage once had a fortune of over $150 million but lost it due to reckless spending and poor financial management. He bought extravagant items like castles in Europe, private islands, rare artifacts such as dinosaur skulls, and even exotic pets like octopuses. Cage's lavish lifestyle, combined with unpaid taxes that led to significant debt with the IRS, forced him to sell many of his properties at a loss. To recover, he took on multiple film roles, sometimes in low-budget productions, just to pay off his debts. Mike Tyson earned around $300 million during his boxing career but squandered it all on a lifestyle of extreme excess. He owned multiple mansions, expensive cars, jewelry, and famously kept pet tigers. Additionally, his legal battles, costly divorces, and spending habits spiraled out of control. By 2003, Tyson declared bankruptcy, despite his massive earnings. He later rebuilt his life through film appearances and other entertainment ventures, but his financial collapse remains one of the most notorious among athletes. 50 Cent made a fortune from his music career, business ventures, and a lucrative vitamin water deal but ended up filing for bankruptcy in 2015. His financial troubles were largely due to extravagant spending, bad investments, and expensive legal battles, including a $7 million lawsuit for defamation. Declaring bankruptcy allowed him to restructure his debts, and he eventually recovered his wealth through smart business moves, including television production. MC Hammer was at the peak of his career with a net worth of $70 million but lost everything due to an unsustainable lifestyle. He hired a massive entourage of over 200 people, bought a lavish mansion, and spent excessively on cars, jewelry, and luxury items. His inability to manage his finances led to debts exceeding $13 million. In 1996, he filed for bankruptcy, illustrating the dangers of living beyond one's means, no matter the income level. Kim Basinger lost a substantial portion of her wealth after making a risky investment by buying the town of Braselton, Georgia. She intended to turn it into a tourist attraction and film destination, but the project failed, leading to severe financial losses. Additionally, Basinger faced a costly legal battle after withdrawing from the movie, Boxing Helena, resulting in a multi-million-dollar judgment against her. She filed for bankruptcy in 1993, showcasing how even seemingly visionary investments can lead to disaster. Allen Iverson earned around $200 million during his NBA career but faced financial ruin due to reckless spending and poor financial planning. Known for his flashy lifestyle, Iverson spent lavishly on jewelry, luxury cars, designer clothes, and maintained an extensive entourage. He reportedly struggled with budgeting and did not save for the future. Despite his earnings, he faced lawsuits and debts, ultimately leading to reports of near bankruptcy. However, a trust fund set to pay him $32 million when he turns 55 may offer him financial security later in life. Michael Jackson, despite generating billions in revenue, faced significant financial difficulties due to his extravagant lifestyle and mounting debts. His Neverland Ranch was an expensive endeavor, costing millions in maintenance and staffing. Jackson also spent excessively on art, memorabilia, and luxury items, while legal disputes and settlements drained his finances. At the time of his death, he was reportedly $400 million in debt, highlighting how even immense wealth can vanish with poor financial management. Burt Reynolds amassed significant wealth through his acting career but lost it due to poor investments and an unsustainable lifestyle. He invested in failed ventures, including a dinner theater chain, and owned multiple luxurious properties. Expensive divorces and a lavish way of living further depleted his finances. In 1996, Reynolds filed for bankruptcy, revealing debts of $10 million, which underscored his financial mismanagement despite decades of success in Hollywood. Johnny Depp earned over $650 million from his film career but faced financial ruin due to extravagant spending, legal battles, and alleged mismanagement by his financial advisors. Depp's expenses included luxury homes, private islands, a massive art collection, and even a monthly wine budget reportedly exceeding $30,000. Disputes with his management team over alleged fraud led to costly lawsuits, contributing to his financial decline. His story is a stark reminder of how even the highest earnings can be squandered without proper oversight. Kanye West publicly revealed that he was $53 million in debt in 2016, largely due to his ambitious ventures in fashion and music, which required substantial personal investment. Despite his successful music career, his clothing line, Yeezy, initially faced significant production costs and financial challenges. However, strategic partnerships, particularly with Adidas, turned his fortunes around, making him one of the wealthiest figures in entertainment today. His financial journey illustrates the high risks and potential rewards of entrepreneurship. Elon Musk risked his entire fortune during the early years of Tesla and SpaceX. After selling PayPal, Musk invested almost all his proceeds into these ventures, leaving him nearly broke. In 2008, both companies were on the brink of collapse amid the global financial crisis, and Musk faced personal bankruptcy. However, last-minute deals and investments saved both companies, leading to immense success and making him one of the richest people in the world. His story is a testament to high-stakes risk-taking and visionary perseverance. Jordan Belfort, famously known as the Wolf of Wall Street, amassed a massive fortune through fraudulent stock market schemes. His brokerage firm, Stratton Oakmont, manipulated stock prices, leading to significant financial losses for investors. After his illegal activities were exposed, Belfort lost everything and served prison time for securities fraud and money laundering. Following his release, he rebuilt his wealth through motivational speaking and book sales but remains a controversial figure due to his past. Lehman Brothers executives lost their fortunes when the bank collapsed in 2008, triggering the global financial crisis. The firm had heavily invested in mortgage-backed securities, which became worthless when the housing bubble burst. The bankruptcy wiped out shareholders, employees' pensions, and the personal wealth of many executives who held substantial stock options. Their downfall exemplifies the catastrophic consequences of risky financial practices and inadequate regulatory oversight. Bernie Madoff orchestrated the largest Ponzi scheme in history, defrauding investors of an estimated $65 billion. Promising consistent, high returns, Madoff used funds from new investors to pay returns to existing ones. When the scheme collapsed during the 2008 financial crisis, thousands of people, including charities and wealthy individuals, lost their savings. Madoff was sentenced to 150 years in prison, and his personal assets were seized, leaving his family financially ruined. His case serves as a stark warning of the dangers of financial fraud and unchecked greed. Please, before we continue, like and share this video and do not forget to subscribe in order to support the channel. In each of these cases, there was a defining moment. A decision that sealed their fate. Whether it was refusing to sell at the right time, ignoring warning signs, or taking on excessive risk, these mistakes cost them everything. Imagine being worth hundreds of millions one day, and the next, having nothing. How do you recover from that? Wealth is never guaranteed. No matter how much you have, one wrong move can bring it all crashing down. The biggest lesson? Never put all your eggs in one basket, always have an exit strategy, and respect the power of risk. Even the richest people in the world aren't immune to financial collapse. The difference between those who recover and those who don't is the ability to adapt, learn, and avoid making the same mistakes twice. Which of these stories shocked you the most? Let me know in the comments. And if you want to learn how to protect and grow your wealth, check out this next video on smart investing strategies. Don't forget to subscribe for more financial insights.